Good morning, everyone. I hope that you are doing well. Welcome to this new lecture of the Uncensored series. This lecture is also going to be uploaded on my public YouTube channel as part of the 2025 Zeussy Mentorship. What you can see here is that I'm in front of you on the live Nasdaq market on the RE chart. Ever since the weekly open, which has taken place right here on Sunday, you can see that the market dropped more than 1,000 points, as you can see right here. This was very huge repricing lower which took place as a result of the narrative being in play that China developed a super AI, so to say. And that super AI would so-called outcompete the majority of the American AI companies out there. This narrative was utilized to dump the markets, and we saw the market eventually form a low throughout the London session on Monday. Notice that when this low formed, we saw the market begin to retrace and began consolidating. It began just going back and forth, as you can see right here. Now for today, what I will be looking for is the following. What I will be looking for is the signs that confirm to me that we're likely going to see a buy program unfold throughout the 8 o'clock RE candle. The reason why is because what you can see is that price is currently being repriced towards the downside. We're trading below the midnight open, which formed at 12 AM, and the monthly and yearly open, which are plotted by the indicator which I use. Next to that, what you can see is that we saw the market initially open up, drop lower for the day, and we then saw it begin to run towards the upside. Notice that it came in very close proximity to this high right here and actually took it out. Notice, however, that these highs are now relatively equal highs. That is suspicious. The reason why that is suspicious is due to the fact that these highs are too smooth. And whenever you see smooth highs like this, you must immediately think to yourself, alright, that could be potentially engineered buy-side liquidity. And therefore, what I will be monitoring is the following. I will be monitoring whether or not that macro from 745 to 815 is going to get utilized to do the following. When we zoom into this delivery, what I want you to see is that we saw the market drop lower with these 3 down close candles right here. Notice that on the lower time frames, however, this is the sell side of the curve within a market maker buy model, which is being established. Where I can see that the market was dropping, and now what is everyone thinking? Every retail mind trader is thinking to themselves, alright, we're likely going to see lower prices, we're likely going to be very bearish, right? That's their thought process. However, what I'm expecting is this. I'm expecting that we're likely going to see repricing higher taking place very soon. So what I will be looking for is I will be looking for a buying opportunity on NQ, which is going to present itself throughout the upcoming macro. When we pay attention to the 1 minute chart then on Nasdaq, what I want you to see is that the market was dropping throughout the latter part of London being from 2:30 AM to 7 AM. I will teach you more on these time cycles which I use later throughout the public mentorship. My private mentorship students already know in great detail how I use them, but they're of great importance. Notice that the high of London formed right here and we saw the market drop towards the downside. The market was just going lower, and there were a lot of nice retracements. Notice that we eventually saw the market open up at 7:30 here and we saw it take out this sell-side liquidity pool. Why is this sell-side liquidity pool important? Because this low right here was the previous 30-minute cycle low. Since 7 o'clock, the market has been doing one thing. It has been dropping lower, as you can see. Eventually, the market retraced and 7:30 came along. 7:30 opened low, taking out sell-side liquidity resting below this low, and now I'm expecting that throughout the upcoming macro, we're likely going to see a repricing higher taking place. So as you can see, I'm going long right here on NQ, and I'm going to target the buy-side liquidity resting above the London high. That's my ideal objective, so to say. Notice that an imbalance is forming right here. This is another long opportunity right here. Very tiny imbalance, but still an imbalance. Let me just zoom in for you. And I'm going long off this imbalance. Now, when we measure the range from high to low, what I want you to see is the following. When we understand that this is a key buy-side liquidity pool objective, the London high, and we look at the low, which formed right here, you can see that we can measure that range from high to low, and that provides us with equilibrium. When we pay attention to equilibrium of this range, this is also a potential objective. Because the higher time frame order flow is not clear to me right now, I will be monitoring the reaction to equilibrium and its 7 o'clock opening price to gauge the order flow. Pay attention to that 1 minute imbalance. Notice that I'm going long on Nasdaq below the midnight opening price. Expecting that we're likely going to see distribution higher taking place soon. Ideally, I would like to see the market gravitate towards that London high, with buy-side liquidity resting above this high, of course. But if we see a rejection taking place of 50%, then I will have to partial accordingly. And that is trade management, guys. You can prepare your partials hours in advance. You can prepare where you're going to get in and where you're going to get out. And more importantly, when. And that's crucial to understand. And not many people are aware of that. Now I'm continuously monitoring the reaction to this 1 minute imbalance the price is currently trading in. I do not want to see the market displace below that. Let's just zoom in a bit so that the candles are more obvious. Notice that we have this down close candle here as well. This should function as support on price. Now it's simply a patience game, guys, because all we can do is monitor the reaction to that imbalance and the down close candle. What I like is how we just formed that big down close candle right here. This down close candle right here. Because it shows to me that manipulation is taking place. Now, when it comes to these episodes, I understand that it might be boring for me to not speak, but I'm just focused, guys. I'm just reading the markets and I'm simply waiting. The reaction to this imbalance will be very telling. The moment that price begins to expand away from it and expands higher, that is when I can get confident in the fact van, all right, I'm on site. And that's like the confirmation of, yes, IPTA is now on site with my analysis. Or I should say, my analysis is on site with IPTA. Because quite frankly, IPTA doesn't care about my analysis. It's going to do what it's programmed to do. And the only thing I can do is align myself with that. Fighting against it won't work. Trying to force my own will won't work. All I can do is listen to what IPTA is telling to me. And that, quite frankly, is a result of me understanding what IPTA is referring to, and more importantly, when it is referring to that. Because when I recognize those algorithmic signatures, what I can say is, all right, well, if in fact this and this and this is all occurring within the right order at the right time, then that means that the only logical thing for IPTA to do next is the following. And that right there is a paradigm shift which has to occur, where you begin to view the markets from a completely different perspective. Where the majority of people seem to believe that it's price patterns that are the reason why price goes up and down. Price patterns have absolutely nothing to do with the delivery of price. Surely you just have seen me enter based upon an imbalance, and that is the entry pattern which I use to get into that position. The entry pattern itself is not the reason why price is going to expand higher soon. It's the logic behind the right time being in play and the fact that the right price is now being offered. So it means that I'm expecting that within the upcoming, I'd say around 20, 24 minutes or so, I'm I'm expecting that if that is going to spool towards the upside, where it's going to reprice higher with a sense of urgency, where it's going to be like, we need to run higher now. And that is where you can anticipate big green candles to come and such. I'm monitoring direction to this midnight open right here. I would like to see the market get above that soon and begin to utilize it as support on price. Now, what's interesting about this wall delivery, right, is that when you look at it, you can see that 7 o'clock opened, barely formed a high right here. I'll just override it for you. Barely formed a high and immediately began dropping towards the downside. The reason why that is of great importance to me is because that is telling to me that manipulation has taken place, so that when the time is right, distribution can occur. I like how price is just stabbing above that midnight open for a while. I'm going to actually go long again on Nasdaq. I'm going to pair mid. My stop will be trailed, as you can see. My stop is trailed to this newly formed low right here. The market should never displace below this low. It's not allowed. When we pay attention to the left right here, what you can see as well, by the way, is that we have this upclose candle right here, this high. Do you see that this high formed inside of this CB right here on the left? I can extend this high to the right, and when we displace above it, we are likely going to see the market utilize that higher support and price to begin expanding towards the upside. So it's allowed to just retrace from here into that imbalance which just formed and then begin running. However, if we do not retrace into this imbalance and instead just displace higher, man oh man, then I know that we're really on side, because then we're likely going to see a very quick expansion. Meaning a retracement is allowed, however, preferably I would like to see the market begin to run soon. And there you're seeing the retracement taking place. And that is beginning to look rather pretty, huh? Retrace into that imbalance and then trade above the upclose candle which I had outlined. Now, what I want to see is the thing. I want to see that specific upclose candle function as support and price. It means that at this moment in time, I'm throwing my stop again to the low of the imbalance which I entered off. I never want to see the market retrace back into this lower end of that green box. It should just begin to run soon. I actually have a pretty busy schedule for today, so I won't be able to be here for a long time. But let's see whether or not the market delivers throughout the upcoming, I'd say, 30 minutes or so. Ideally, I would like to see my objectives of at least 50% of the range and maybe even 75% of the range that I have plotted on my chart get reached, I would say, soon. So pay attention to this upclose candle right here. I'm going to pyramid inside of that right here. At the open of this new candle. Notice that we traded above the midnight opening with speed. So now I want to see the market begin to expand rather soon. I would not want to see the market begin to consolidate or such. That would not be pretty. Pay attention to the reaction to this down close candle right here. Just annotate the high and low of the down close candle. Like this. Perfect. I would like to see the market find support inside the down close candle. It's possible that price might trade below it, back below the midnight opening price. However, for the most quick repricing to occur, for the most speed and velocity, so to say, I want to see Nasdaq begin to run rather soon. And the reason why is because ES has already traded above the 7 o'clock open, whilst Nasdaq hasn't yet. So that is a current correlation which is present between Nasdaq and ES, where you can see that ES is front running Nasdaq a bit. And intermarket relationship wise, that is also not surprising because ES has been the quicker market, so to say. Meaning it has been the market which has been leading the dog. Now, when you pay attention to time on the bottom right, you will see that it's now 7:58, meaning the 8 o'clock open is coming rather soon. And we will be monitoring how we're going to open up. One thing which I want you to understand, by the way, is that within my normal lectures, I'm of course usually rather enthusiastic. You know, I'm speaking a lot and I'm, making wordplays and just making sure that my lectures aren't boring, etc. Within these episodes, I'm not. And the reason why is because I'm completely dead inside. All I'm doing is I'm internalizing how the market is delivering. I'm monitoring each 1 minute candle and I'm monitoring how it's printing. I'm monitoring how it's delivering. I'm monitoring whether or not the right minutes are delivering the right way, etc. And that right there requires a level of focus that words can't describe. And if you want to be entertained, if you, want to have fun whilst watching YouTube content, whatever, right? Then you need to go somewhere else. Simple as that. If you go somewhere else, you will not see this level of precision. And that's not me being arrogant, it's just me stating facts. And that's all there is to say. At the end of the day, guys, when you open up the charts, you need to become a different person. And that different person has to be dead inside. You need to be able to just internalize market data for what it is. You need to be able to just sit here and read the order flow. You need to read what IPTA is telling to you. Because when you start to think this way, and you start to actually just create that alter ego for yourself, the moment that you sit behind your desk and you open up the charts, you just must be focused on that what matters. And that what matters is what IPTA is telling to you, because you try to align yourself with that. And that's the only thing on my mind. Am I doing right now what I should be doing inside this position? If the answer to that question is no, then I need to get out. If the answer to that question is yes, then it means I can stay in. And it means that I'm doing the right thing right now. Pay attention to that 8 o'clock open. I'm going to add one more contract right here. And we're going to trail my stop to the higher end of that imbalance, which I went long off initially. And the reason why I'm going long, again, is because I'm going long inside of that down cross candle at the open of 8 o'clock, as you can see. It's possible that we might drop one more time lower at 8 o'clock, yes, but that would be okay. But it's also possible that we're just going to run at exactly 8 o'clock. So I'll be monitoring specifically how the upcoming minutes will deliver. Either how I'm in the position, I'm on site, so to say, I'm in sync, and we'll see how IPTA is going to deliver from now on. Notice that we have an imbalance which forms right here, below the 7 o'clock open. Can extend this imbalance to the right. I want to see this imbalance function as support on price once this plays through. And I would not like to see a rejection taking place from there. The reason why I'm saying that is because notice that when you go to the left and you look to the left of that imbalance, you will see an old row. And as you know, whenever we see an old row getting displaced through by an imbalance, that's always a warning sign, so to say, and that shows to you that that reaction to that level will be crucial for gouging the order flow. Because if a rejection takes place off that row, it could be potentially support turning into resistance. And therefore I'm saying to you, I would like to see the market displace just straight through it. If that does not occur, then it does not occur, but then I'm actually trying my stop to break even. But so far it's looking good. And when I annotate this row, what I want you to see is the following. What I want you to see is that this row was actually the previous 90-minute cycle row. What did you just say? 90-minute cycles? What are those? Yep, it will all come. Time and price. If the size of the move from my entry, from my first entry, I should say, to the previous cycle low would be very significant, then I would partial there and I would take something off. However, in this case, I have a higher time frame analysis made. I have an idea of how I believe that we're likely going to deliver. So that is why I'm okay with holding on to this position, even if price might tap into that low and reject it initially. It's allowed to do that, don't get me wrong. However, ideally, I would like to see that imbalance getting displaced through and begin to function as support on price. More specifically, I would like to see the market get above this upgrowth candle and utilize that as support on price, because then we would see a previous cycle low turning into support. And that's one of the most beautiful algorithmic signatures which you can investigate. Notice that a big downgrowth candle is now forming, and notice that they stopped right in advance of the low of the previous cycle. That right there is again the engineering of buy liquidity which is taking place. And what they're doing is they're trapping people into believing that the high is in, so that they are now going to chase the market short, whilst in reality, smart money is buying more throughout this drop lower. And that's a very important insight to have, because it shows to you that manipulation is taking place on a smaller scale, where manipulation occurred within the bigger time cycle from 7 o'clock. You can also see that now within this small window of time, the same sequence is occurring. So price is now trading below the 8 o'clock open, and that's going to be a entry for me again, a pyramid. So notice how I'm able to pyramid into my position whilst keeping the risk around equal. Notice that I'm able to go long inside of that same upclose candle, which formed inside of a CB. Notice that price is trading below the midnight opening price one more time. And what's occurring here is that smart money is being provided the opportunity to go long one more time in a discount relative to that midnight opening price. Notice that price came back to my entry, and this is where the majority of you would probably be fearful and would get scared. However, you need to understand that nothing has changed about the underlying idea. In fact, this is just manipulation which is going on, so that the market can soon begin to expand towards the upside. I want to see this body of this candle close inside of the range of this up-close candle ideally. Just annotate it properly right here. I'm monitoring specifically whether or not we're going to reject this low right here or not. Price should never return back to the green box, which I have plotted on my chart, which is that BC which I went wrong of initially. Things are not looking pretty when it comes to the underlying order flow. So I'm giving it this final chance right here. It has to begin running soon or else I'm out. So I'm typing out final chance here. And when you type out final chances here, you need to understand that it's literally the final opportunity for the market to begin expanding into your anticipated direction. If it doesn't begin expanding when this gets typed out, yes, of course there's a whole logic behind why this is being typed out, but if you understand that logic and you type this out, it literally has to get running within just, let's say, less than 5 minutes. It literally just has to begin expanding into your favor like right away. Because if it doesn't, those are big warning signs. Now, do you see those imbalances which formed right here? These CBs? I'm not looking at these CBs as shorting opportunities because as outlined, I'm looking at this whole drop lower as manipulation. I'm looking at it through the lens of, all right, we're dropping lower to trap people into believing that a high is in, whilst in reality we stopped in advance of that previous cycle low, which is of course a key level to monitor. So far, I'm liking the reaction that I'm seeing. So they dropped it below the midnight opening price, below the 8 o'clock opening price. And you can see that they took out that sell side liquidity pool and then formed that low. Now, I want to see it really just run through those imbalances. I don't want to see it reject them in any shape or form. Now, at this moment in time, all I'm doing is literally submitting to time. I'm submitting to IPDA to just deliver within the analysis which I have made. And that's all I'm caring about. I'm caring about, all right, I have my analysis made. Is IPDA following along with my analysis? Is it doing what it's supposed to be doing? Is it doing what I want to see it do? And when the answer to that question is consistently yes, and it doesn't reach any invalidation levels of mine, then it means I'm in the trade and I'm just going to manage the trade accordingly. Monitor direction to this old down cross candle, its range right here. I hope that you're enjoying the public mentorship series so far. It's, in my opinion, a very structured playlist so far, and that's something which I truly hope to continue as well. I have set out a plan of what I want to share and what I will be discussing, and that is just going to be rolled out as time passes, hopefully. And that is what my focus is on when it comes to the public content. Throughout the year of 2024, I've posted a lot of execution videos and such. However, the style of video which you're watching now is something which I'm also going to release more of, so to say. Now, the reason why this drop lower was still allowed, even though we traded below the down cross candle and below this up cross candle, was due to the following. When you pay attention to this low, which I've annotated with the X right here, sales liquidity was engineered below that first fall, and we dropped below the 8 o'clock open, and we dropped below that midnight opening price once more. But when we pay close attention to this high right here, you can see that this high got traded into right here. Before that, it was never traded into. Even though it formed inside of this CB, we saw BC displays through it. Therefore, you understand that this high has to get retraced into at one moment in time. Now, if it was a very, very quick market, it would have not retraced this deep, this late. However, what you can see is that it still occurred, and that is something I had allowed for. And now we're just monitoring whether or not the market is going to draw towards the previous cycle low, because again, this is not a short right here inside of these imbalances. This recording is already pretty long, and I'm curious to see how many of you are still following along. But at the end of the day, guys, like if you're not even able to literally watch over my shoulder whilst I'm trading in front of you, and you're already bored after 10, 15 minutes, 20 minutes, whatever, right? I'm sorry, but you're not going to make it. You need to develop a sense of patience. You need to be able to literally just say, all right, I'm going to submit the time and I'm going to investigate. I'm going to pay attention to when he mentions what he mentions and basically how he analyzes the markets. Looks like they're drawing towards that engineered buy side indeed. Now again, the reaction to that previous cycle low will be very telling. Alright, this is where the high has been made eject and price is now trading inside of the imbalance. I'm getting ready to potentially take contracts off here if I begin to see the market reject this. However, ideally I would like to see it just displace through it soon, use it as support. I'm going to give it some time. If the initial rejection takes place, that's not necessarily an issue, but I just want to see how we're going to react off this CB here. Notice how price is trading back into the high, which formed in advance of that CB here. Extending this high to the right. I'll make it green. Okay, now the market is at a very important price level. The reaction to this level will be very telling, because it is that previous cycle low as outlined. Pay attention to this opco scanner right here. Notice how the market just wicked into the previous cycle low, traded a bit above it and then rejected it right here. At this moment in time, I'm throwing my stop to just a bit of break even. The anticipation is still the same, that we're likely going to see a bullish hour between 8 to 9. So going to hold on to that analysis until proof otherwise. Notice how price is so far finding support inside the upgo candle. Beautiful, ain't it? Almost as if it's algorithmically driven, right? The thing is, guys, like for the newer students, for the newcomers, so to say, this level of precision is like, how, right? You're probably wondering like, how is he able to do it this precise? How is he able to call the delivery this precise? How is he able to trade it this precise, right? You need to understand that there's no randomness in these markets. It's all algorithmically driven. These markets are delivered based on time and price. At the right time, this will happen in price. And when you're able to understand that, and you're able to begin to look for these algorithmic signatures, a completely new paradigm will open up for you. And you're going to be looking at these markets and you're like, how didn't I see that prior? How was I not able to see these signatures prior? Because it's so well hidden, guys. It's literally hidden in plain sight. And all you need to do is investigate. And all I ask of you is to just study what I'm showing to you. Because I know it works. I know it repeats. I'm going to take a partial when we reach 50%. Just extending this to the right. I know it works, guys. Now the question you must ask yourself is, are you willing to investigate? Are you willing to put in the time and investigate what I'm showcasing to you? Notice that we have now also nearly, or actually, let me just check. 341. Nope. Close though. Nasdaq hasn't traded above the 7 o'clock open just yet. I want to see it get above there soon in order for continuation higher to take place. So I just partialed at 50% of the current range. And that's already a very nice, nice partial in my opinion. Now the reaction to 50% will be very telling moving forward. And especially also to that 7 o'clock open. This moment in time, what I will do is I will trail my stop very aggressively because I need to see it begin to run. I don't want to see it retrace deeply. Alright, price is now traded above the 7 o'clock open, as you can see. Let's see how we're going to react off here. If you don't understand it yet, trust me, it will happen. Simple as that. All you need to do is you need to show up and you need to investigate. You need to pay attention to time and price, and everything will fall into place. Just submit the time, keep on showing up, and the puzzle pieces will fall together. And when they do, you're going to be looking around and you're going to be like, what? Yep. Now, what I'm monitoring is intermarket relationship on one of my other screens, where I'm monitoring the Nasdaq and the S&P, the Dow Jones and the dollar. And so far they're moving in the right way, so to say. But I want to see Nasdaq catch up to ES actually, because ES is again, like outlined prior, front running Nasdaq, and that by itself is not a bad sign by any by any means or so. That's not what I'm saying. Or if it just means that Nasdaq has some catching up to do. And if ES would take out specific levels or reach specific levels before Nasdaq does, then that is a warning sign. But right now, that's not the case yet. So what I'm monitoring is, all right, how is ES going to trade the upcoming, I'd say 30 minutes or so? If ES is going to continuously expand higher and reach the London high before Nasdaq will, then that means that we have a correct correlation there, and that means I have to partial. But so far, it's looking good. Notice that we've just taken out the high of the current 90-minute cycle from 7 to 8:30. I like how they just slammed through that previous cycle low right here. Do you see how they just repriced through it right away? That shows strength and it shows urgency. What I like as another potential objective is the buy side liquidity pool of this high right here. Right here. I will be monitoring the reaction to that level. I'm sure that at this moment in the episode, 95% of all viewers have probably already clicked away due to boredom, due to maybe like tiredness, whatever, right? Maybe they're like, oh, can you speak more? Can you, can you be more entertaining and this and that? Whatever, guys. I'm just trading, and you're just being given the opportunity to watch over my shoulder and to listen to my internal dialogue. And I hope that you appreciate it. But respect to you if you're still watching at this moment in the lecture, on the episode, whatever you want to call this, right, in the video. Because I know that if I go and look at the analytics of the YouTube video afterwards, or even on the mentorship platform, we can track for every student how much they're studying the content, right? We can look for every student, like, all right, how much hours are they watching the content, when are they clicking off, etc. And that gives us a good idea of who's putting in the work and who isn't. And even when it comes to this public lecture, what I can see is I can see, okay, well, when are the people clicking away, until when is the average retention, etc. And I'm telling you, it won't be high on this video, because the majority of people are simply too impatient. They are simply too impatient to investigate, to study. And when you think about it, right, it makes sense why the majority of traders fail, because they're not willing to investigate what they know they should be investigating. And only if they knew that I always save the gems, save the best parts of my episodes or lectures till the end. Because it's not for the weak. I'm not creating short videos to just say, look, do this, 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 and that's done. No, because it doesn't work that way, guys. You need to develop patience. You need to be able to say, all right, well, I need to submit to time. I need to develop this sense of patience and self-control that I'm able to say, okay, I know this should happen at this moment in time because you have seen it so many times in the past, because you know that that is how IPTA is coded to deliver. And when you know these things, the only thing that there's out there left for you to do is to simply stick to it. And it's that straightforward, guys. You just need to investigate what I'm telling you to investigate. And I don't know when, but I know that at one point in time, it will click. And you will be able to see these moves happen before they occur. And when that occurs, all I ask of you is a thank you. Just a thank you, and that's all. Now the new cycle is going to open up, and that's making me actually want to partial a bit early right here. So what I will do, I will just take 2 contracts off right here, because we've taken out the buy side liquidity right here, and I don't want to sit through a deep retracement. Let's see how A30 is going to deliver now. If A30 delivers the buy side liquidity pool objective, that will be another partial. Or if I did not like how a cracking correlation was present in advance of the open of this new cycle between Nasdaq and TS. You're getting the real good gems right here. Now, when it comes to the delivery, what you're seeing is you're seeing a buy program unfold. However, due to the higher time frame order flow, which is right now, I would say not that clear yet in advance of FOMC, you can see that I'm very aggressive with my partials. Throughout the past few weeks, the markets have been very bullish, and therefore we could hold on for example, the highs of London, etc. Right? We could be very aggressive when it comes to the targeting and such, because we were trading in line with the higher time frame order flow. Now that the higher time frame order flow is not clear, we must say, all right, well, we're going to take trades, but the trades that we'll take are going to be managed aggressively. Because tell me, right? If you would be in this position, like I am now, would you be confident when you see such a drop taking place as you're seeing take place now? Would you be okay with saying, you know what? I'm just going to try and hold for that London high. I'm just going to try and see whether or not that London high is going to get taken out. And you're going to be like, shit, why did I just take a partial? Guys, taking partials is the best thing you can do when you recognize that there are signs present that we might be turning. Doesn't have to be a long-term change. It doesn't mean that the higher time frame order flow or the order flow for this cycle, for this session, right, has changed all of a sudden. We're no longer going to be looking for longs. It does mean that you're going to see your profits, your open profits, disappear if you do not take partials accordingly. It doesn't matter if you're up massively if you do not take partials. It doesn't matter if you do not close the positions, right? Notice how the market is coming back into the lower end of that high which I've annotated, and that is my trailed stop hit. I do not like how low we came. But just to finalize this lecture before I end it off, right on time, right? Right around at 8:30 open, that the job is done. When it comes to trading, right, I want you to stop trying to say, all right, I need to aim specifically for that golden session high in order to find a profitable trade. Because you have just seen that my final objective was not reached yet. Maybe it will get reached later, maybe it will get reached at a later point in time, right? I'm not saying that it won't. However, you have just seen that the trade that I took did not fully pan out, meaning my final draw on liquidity was not met. But because I partial accordingly, I'm able to still capitalize on the move which is taking place. And that's one of the most beautiful insights which you will gain by investigating these fractals. Because it's all just market maker models. It's all just fractals forming in each other. Because let me tell you something. Remember how I was speaking about the 7 o'clock open? This is actually a key time-based liquidity pool which was taken out. And when that time-based liquidity pool was taken out and we saw SMT taking place right in advance of that 8:30 open, it tells to me, all right, partial, and that is why I partialed here. Should I have taken 3 contracts off instead of 2? Maybe. In hindsight, it's always easy to say, yeah, I should have done this and that, right? However, in this moment in time, 8:30 could have also just ran towards the next objectives and then that would have been the business, right? But note that price has displaced through that CB below the previous cycle low again, so this is by no means looking bullish for now. So I'm happy how I managed the position. I'm happy I got out and yeah, now it's just monitoring whether or not if they will in fact deliver those final objectives or not. I'm not going to be looking at the markets anymore until maybe later in the day, but I'm pretty content with this move. It was a nice trade, nice setup, and the job is done. I want to thank you for watching this lecture all the way to the end. Again, hats off to you if you did, because I didn't speak much. I was just doing my thing. I hope that you enjoyed it, and I look forward to speaking to you in the next one. Be safe, and I wish you all the best in your journey.